On January 27, 2025, nearly $600 billion was wiped off the value of Nvidia in a single day, the largest one-day loss in stock market history. The Nasdaq dropped over 3%. Broadcom fell 17%. $1 trillion vanished from the U.S. tech sector before lunchtime. The cause wasn't a recession, a scandal, or a war. It was a chatbot. A chatbot built by a Chinese startup that almost nobody in the West had heard of, using a fraction of the resources that Silicon Valley said were necessary. Its name was DeepSeek, and it had just shattered everything the AI industry thought it knew about how to build intelligence. Here's how it happened. DeepSeek was founded in May 2023 by Liang Wenfeng, a Chinese entrepreneur who made his name not in technology, but in finance. In 2015, Liang co-founded Highflyer, a quantitative hedge fund that used AI to predict market trends and make investment decisions. By 2021, Highflyer was managing over $10 billion in assets, and Liang had become fascinated with the technology powering his own trading algorithms. That year, before the U.S. government began restricting AI chip exports to China, Liang started buying thousands of Nvidia processors. Acquaintances at the time viewed it as a quirky hobby that didn't look like it would go anywhere. When OpenAI released ChatGPT in late 2022 and the world suddenly realized what large language models could do, Liang saw his opening. He launched DeepSeek as an offshoot of Highflyer, with a small team of researchers recruited from China's top universities. The mission was to build foundational AI models that could compete with the best in the world, not by spending more, but by thinking smarter.
And that's exactly what they did. In January 2025, DeepSeek released its R1 reasoning model, and the world stopped. R1 matched, and in some benchmarks outperformed OpenAI's most advanced models, rivaling systems that had cost hundreds of millions of dollars to develop. But here's the part that sent shockwaves through the industry. DeepSeek reportedly trained R1 using just 2,000 Nvidia H800 chips at a cost of under $6 million. For context, U.S. tech giants had been spending tens of billions of dollars building massive data centers packed with the most powerful chips money could buy, all operating under the assumption that more compute meant better AI. DeepSeek proved that assumption wrong. It achieved comparable results with a fraction of the hardware, a fraction of the energy, and a fraction of the budget. The market reaction was immediate and brutal. Investors panicked. If a small Chinese startup could match Silicon Valley's best with $6 million, what did that say about the hundreds of billions being poured into AI infrastructure? The sell-off hit Nvidia hardest because its entire business model was built on the idea that the world would need an ever-increasing number of high-end AI chips. DeepSeek had just demonstrated that maybe it wouldn't. Mark Andreessen, one of the most influential investors in Silicon Valley, called it AI's Sputnik moment, a reference to the Cold War shock of the Soviet Union launching the Cold War war of the Soviet Union launching the first satellite before America could. But the technology isn't the only story. DeepSeek comes with something built into its DNA that Western AI models don't: state-aligned censorship. Ask DeepSeek about the events in Tiananmen Square in 1989, and it will start typing a response before deleting it entirely and replacing it with a message saying the topic is beyond its scope. Ask about the treatment of Uyghur Muslims in Xinjiang, and you'll get a response that closely mirrors the Chinese government's official position. Ask about Taiwan's independence, and the model will tell you that Taiwan has been an inseparable part of China since ancient times. One study found that DeepSeek refuses to answer 85% of questions on topics the Chinese government considers politically sensitive. Chinese law requires AI models to avoid generating content that damages national unity or social harmony, and DeepSeek complies. There are also serious data privacy concerns. DeepSeek's privacy policy states that user data is stored on servers in China, subject to Chinese law. For millions of users downloading the app worldwide,
That means their conversations, their prompts, and their data are sitting on infrastructure that the Chinese government could theoretically access. Several countries have already begun restricting or investigating DeepSeek's use in government settings, and the conversation around whether a Chinese AI model should be trusted with sensitive information is only getting louder.
Then there's the question of how DeepSeek got so good so fast. OpenAI has directly accused DeepSeek of using its models to train its own, a practice known as distillation. According to OpenAI, DeepSeek employees developed techniques to bypass access restrictions and extract outputs from OpenAI's systems through third-party routers. DeepSeek has not publicly addressed these allegations in detail, but the accusation raises uncomfortable questions about intellectual property and whether the playing field is truly level.
Despite all of this, the impact of DeepSeek on the AI industry has been enormous. It proved that cutting-edge AI doesn't require unlimited budgets. It forced every major tech company to rethink its spending strategy. It made open-source AI more credible than ever, since DeepSeek released its models for anyone to download, modify, and use for free. Even the CEOs who lost billions in market value praised the technology. Google's Sundar Pichai, Apple's Tim Cook, and Microsoft's Satya Nadella all acknowledged DeepSeek's achievement on their earnings calls. Nvidia's Jensen Huang called it incredibly exciting.
So where does this leave us? A Chinese startup built by a hedge fund manager with a nerdy haircut just proved that you don't need $100 billion to build world-class AI. That's either the most democratizing moment in the history of technology or the beginning of a race with no rules, depending on how you look at it. And that's how it happened. Thanks for watching.